Good morning and welcome to the Po Valley Energy Investor Webinar with Chairman Kevin Bailey. Kevin's going to run through some slides for about 15-20 minutes, and then we'll move on to a question and answer session. All attendees are in listen-only mode, so if you'd like to ask a question at the end, please enter it in the Q&A panel within Zoom. I'll now hand over to Kevin to provide the overview.
Thanks, Aidan. It's great to be here and sharing some of the exciting developments at Po Valley Energy. We've can't believe our luck to be positioned as we are at this time when Europe is really in the throes of a major energy crisis, and we stand well prepared and ready to help to deliver some domestic gas and energy to the sector, and we've been involved in the Italian gas energy sector for over 20 years now. And the bureaucracy, the regulations, there was a lot of things to overcome, and we've found ourselves at the right place at the right time. We'll go through some of the slides that we've got here. The company overview is that we're an emerging gas producer in the region. We've got a lot of experience and a portfolio of natural gas assets in northern Italy. The company is currently advancing towards production. In fact, we're looking March, April next year that we should be online, connected into the national grid. We're adjacent to the grid with one of our major developments at Selva Malvezzi. And I want to really focus on that. That's our major focus. We've got our sleeves rolled up, and we're working diligently to make sure that we can get there on time and on budget. We've got three major licenses in Italy that we're focusing on. The Selva Malvezzi is our #1 priority. We've got an offshore license, which is 100% owned, as opposed to the 63% owned Selva Malvezzi, which we operator, and we're sharing the ownership with Prospects, which is listed on the London Stock Exchange. The Teodorico offshore gas is our largest in-place field, where we've got reserves of 37 billion cubic feet. And we're very interested in the options that are available to us with that particular site. But we've also got Torre de Moro, which is a condensate gas site that we've got exploration phase. It's a little bit further down the track. But let me turn to the Selva Malvezzi. The net 2P reserves net to Po Valley Energy for our 63% or 8.4 BCF. And we've got some 2C resources there of a further 8.9 BCF, which we are very keen to develop. And it's located, as I mentioned, just under a kilometre from the Italian national grid. And we have the final production concession. We've got the decree to begin construction. We've ordered all the long lead items. We've got the piping, which arrives on site just any day now. And we've got a very low CapEx development. And we want to talk about where we're at with that particular field. The company itself, corporately, we have got a share price somewhere between 6 and 7 cents. The market cap is, around about that 70-75 million mark. And we had cash at bank at just under $1 million on the 30th of June, but we've been able to raise very successfully with a placement, $4.5 million, which means that we're fully funded and in very good shape to get through to where we get first gas and we start to generate substantial revenues from the Podem air well. I personally own about 24% of the shares in the company, which I've purchased all of those shares myself, and I'm a major investor. I've been an investor for about 14 years, and I've increased my holding as I've become more and more confident in the opportunity that Po Valley presents. We've had a major restructure of the board, a major update, and we're very, very focused. Now that this opportunity that has come about as a result of the Russian invasion of Ukraine, and the switching off the gas that's been coming into Europe, it's caused a huge crisis, and we're ready and able to deliver. So we'll talk about that in some more detail, but the highlights are that we are strategically well positioned. We can take advantage of the high gas price in Europe. We think things bad here in Australia, but in Europe, they're in an extraordinarily difficult energy situation. And we did all of our numbers on a 20 euro cents per standard cubic meter assumption. And currently, they're well above 2 euros, more than 10 times what we considered was a very commercial outcome. The near-term upside, of course, is that we've got a series of development and exploration opportunities at our 3 licenses that we're focusing on, but we've got reserves and resources attributed. There's a competent persons report that came out on the 26th of July, which I would direct people's attention to. It's on the ASX website, and it really details all of the assets that we've got and the potential opportunity. So that's very worthwhile to give you some really meaty understanding of exactly what's going on with these assets. We're ready for production. We've tendered out to a group in Italy that we've had quite a lot of familiarity with, SRI, and TESI have got the contract to build the surface installation plant, which is a modular plant that will be able to be moved into place fairly quickly, as well as the 1,000 metre, 1 kilometre pipeline to connect us to the grid. And so that's going to start development in the next few weeks. So we're very much on top of everything there. We've got quite a credible team. I want to talk a little bit about our team, particularly the team on the ground in Italy, which is headed up by Giorgio Bertuzzi, who has had over 30 years experience in the area with E&I, well connected, not only with E&I, but with the regulators, with the bureaucracy, with the local governments, and a real asset to us. We mentioned before that it's a low capex development. Our share of the costs for this are 2.7 million euros, and we're well and truly funded to meet all of our requirements. We've done very rigorous cash flow analysis, and we've got all the cash we need to bring us to first gas. The reason that Europe finds itself in such a crisis is that they were drawing, in fact, Italy was drawing over 40% of its gas from Russia. And to find that that's not guaranteed anymore has given them a heck of a shock. And they recognize that they need to develop their domestic gas. Only 92% of Italy's gas consumption needs to be imported either from Algeria, Libya, or Russia. So they're bottom quartile countries on the political stability index. There is every incentive for Italy to be wanting to develop their domestic gas, and they recognize that and are incredibly supportive of companies like ourselves. And so we're a major international company based in Australia here, but operating in Italy. The Italian government plans to reduce their reliance on Russian gas by 2025. They import that large proportion of their gas, and Mario Draghi has said, he's the current Prime Minister of Italy, said that Italy must increase its domestic production at the expense of imports because gas produced in your own country is more manageable and can be cheaper. So they need to replace 29 BCM of Russian gas per year from the start of 2022. And they've already reduced its reliance to 25% from about 40% so far, but there's a lot further they need to go, and that's where we come in. The price for gas has increased 10 times since these market changes began. And so that means that if we are able to bring to the grid these resources, we're going to be very well paid. In fact, Peloton Capital did a stock commentary on the 18th of August, on Po Valley Energy, and they mentioned that we estimate that the Poder Mare 1 well is going to generate a robust revenue stream, an EBITDA, a profit of about 15 million euros or 22 million Australian dollars in its first year, with the P2 reserves expected to provide over 6 years of production, with likely additional production beyond that. So it's very important that we manage this resource. And in fact, if we look at the competent persons report that was released on the 26th of July, they talk about the fact that there were 25 other wells that have been drilled in this region over the last 40 or 50 years. And the length of production from those wells has been very, very substantial. So we're very confident that we'll be able to develop some of those additional prospective resources if we manage our resource properly. So it's quite an exciting opportunity that comes with the Poder Mare well, but there are also a number of other sites within this production concession that I want to draw your attention to. Now, the portfolio of assets, we're talking predominantly today about Selva Malvezzi, which is right in the center of this map. Onshore, not far from Bologna, south of Venice, north of, it's west of Ravenna. And then we've got the Teodorico offshore operation, and then to the south we've got the Torre de Moro. So these are the three main sites we want to talk about. We've also got the Cadel Bosco de Sopra just to the west there. The reserves and resources, Teodorico, as I mentioned, 37 billion cubic feet in reserves. We've got some contingent resources there. These are because these resources are just inside the 12-mile line, and there's some talk of releasing some of these big gas reserves because of their desperate need for energy. If that was to happen, then that could increase our reserves by as much as, you know, sort of 30% or so. And so we're looking at that. The Selva proportion of the reserves for Po Valley Energy are 8.4 billion cubic feet that the report from Peloton Capital was talking about, and the revenues that we're talking about coming from that, which will well and truly fund a number of our developments, and will give us, you know, excess cash flow that many small cap companies would dream of. We've got contingent resources there at Selva level A and level B. We call Selva South and Selva North. I want to talk a little bit more about that. They've got the potential to double the reserves once we've drilled those resources and we've proven them up. They're lookalike tie-ins that could tie into the Poder Mare wellhead and use the same pipeline to connect to the grid. And so that's a fairly easy, obvious way for us to move forward. On top of that, we've got East Selva and Ricardina and Fondo Porino, which will require some seismic, and we want to get stuck into doing that seismic and drilling, finding the best place to put some wells and to prove up those resources as well. And they're substantially bigger than the actual reserves that we've got at Poder Mare. And of course, we've got Cadel Bosco de Sopra and Torre de Moro that we will be looking a little bit further down the track. But our first initiative is Poder Mare. Then we're looking at north and south. We're looking at seismic for east and potentially Ricardino. And there's quite a lot of work for us to be engaging in over the next couple of years to bring that capital value to our investors. Selva Malvezzi has got potential upside that is quite extraordinary. If we look at the center of this map, Poder Mare, where we've got the Poder Mare wellhead, as we've mentioned, we've got 8.4%, which is our 63% of the 13.4 BCF. And that's ready to go as soon as we build the pipeline and connect it to the SNAM connection. SNAM is the regulator that has to connect our well. And so what we're doing here is we've ordered in all of the piping, and that should arrive any day now. We'll make an announcement when that arrives. We've got final approval that we're just going through with the fire department and the UNMIG, which is the National Mining Office for Hydrocarbon carbons and geosources. So we're looking at those there. We've got the ISHMEA process. ISHMEA is the land, the Italian land operator, which is looking to give us full title to the land under compulsory acquisition. In the national interest, we've got the right to the land for our wellhead and pipeline and so forth there. So that's just been finalised, and we'll have announcements in relation to that in due course. Once we've got the piping on site and we're able to commence construction, we expect that by Christmas we should have the pipeline built, ready for connection to the national grid. And of course, then we need to go through the timing of the national grid connection. We need to notify the market of that. We need to notify you when the commencement to the national grid through the regulator SNAM is going to be commencing. We've got a lot of work that we're going to be doing contemporaneously with this, for the G&G, so that we can get Selva North and South drilled as quickly as we possibly can. We want to advance this and bring it forward if we can. We've got the negotiations and the agreement terms in relation to the offtake for the GSA, for the gas sales agreements that we want to finalise, and we'll be announcing those in due course. And then, of course, the commissioning for the Poder well, and then, of course, the operation, first gas volumes delivered to the SNAM connection, and away we go. In the meantime, we'll be looking at the offshore, the very much larger offshore site at Torre de Morro. It's in 30 metres of water offshore, and there's a ENI wellhead at Naomi Pandora, which we can, in 30 metres of water is not very deep, and we can build a 12-kilometre pipeline and connect into the ENI operation there as part of our plan. And that, of course, will go to Ravina and their processing plant. So there's not the need to build another pipeline to the shore and processing plant, all these sorts of things. And so we've got a few things that we need to do to bring that into full production. And that is something that we'll be looking at over the next 2 to 3 years as well. Either we'll do it ourselves. It's quite expensive. It's not the low cap 2.7 million euros that we have with Poder. It's going to be substantially more expensive. We may potentially divest it. It's a great time to be selling assets like this in Europe, and there could be a really potential windfall for us there, or we could joint venture it. We're looking at our options, so there's lots of options that we've got in relation to that. So we'll keep you posted of those indeed. The board has been revamped. I've taken over as chairman in May, rolled my sleeves up, and we're very, very focused on, as Benjamin Franklin said, the two things needed for success are industry and frugality. We're being very careful in the way we spend your money, and also working very, very hard. Sarah Edmondson, who was a previous CEO of Po Valley, American, who lives in Rome, and is doing a terrific job. She's a non-executive director. We've got Joseph Constable, a fund manager with H&G, and a lawyer, Katrina O'Leary, as non-executive directors. And of course, Brent Bonadeo, who he's been tremendous. He was a tremendous asset. We got him on board, very, very experienced as a consultant, and really working daily with us in the execution of the business development and growth initiatives that we've been talking about. And so Brent's got huge experience in gas, energy and power infrastructure, resources. He's right across all these issues, and he's been working very closely with Mr. Giorgio Bertuzzi, as I mentioned, over 30 years experience with ENI. Gianluca has been with us for 14 years. Pierpaolo, and we've got another geologist production manager coming online in the next week or two as well. So we've got a terrific team on the ground in Italy. We've got a good board that's really focused on investors. I'm an investor myself, and we are determined to optimize this opportunity, which comes about once in a lifetime, and it is very, very exciting. the activity timeline is that PM1 construction taking us through from now through to March. We want the first gas, March to June. We've got the G&G studies for Selva North, Selva South, and then some of the seismic for Selva East. And then we've got the drilling for North and South. In the meantime, we'll be looking at the options in relation to the asset realisation at Teodorico. So lots of things on our plate, lots of exciting opportunities in an environment which has got incredible tailwinds for us. So that's where we're at. We've got the Selva development. The construction is, ready to go. First gas within 6 months. And those revenues that Peloton alluded to are very conservative. And that's very good. But not only the first gas that we get there, but the revenues from that, which will then fund and help us to develop North and South, the seismic on East. And we've got quite a growth portfolio with development, exploration upside potential that's going to support our future growth. We've got strong, very strong market conditions, unbelievably strong, unprecedented, with the growing demand for domestic gas supply and the existing infrastructure that we've got. It's a perfect combination. We've got the potential asset realisation at Teodorico and that on-the-ground team with all that experience, which puts us in a sensational space. We're having a lot of fun and we're hoping that we're going to make everyone a lot of money, but we're very focused. You can rest assured of that. Thanks a lot, Aidan.
Thank you, Kevin, for that great run through. Yeah, definitely very exciting times. Does sound like you're in the right place at the right time. So we'll shift over to a Q&A sessions. If there are any questions, please enter in the Q&A panel within Zoom. We have received 2 or 3 already, all on a similar topic in terms of the oil and gas sector in Italy. Trying to sum them up, the government always hasn't been that supportive in terms of regulations and permitting. Are you seeing evidence of that now that's changed because of what's happening in Europe currently?
We've been through it all, Aidan, and what had happened was there was a moratorium put on exploration back in 2019. There was all sorts of problems that we were running into in getting things through environmental approval, et cetera, et cetera. What I was saying is that what we've got is a situation where all of the countries of Europe have got a crisis and governments are 100% behind domestic production. We're seeing tremendous support and encouragement from ministries, from public servants, from the government, and I think that we're not going to see that change in the next several years. There's a commitment, no matter what side of government gets into power in the future. It's certainly they've had a bit of a bloody nose from all of the countries of Europe have a bit of a bloody nose from what's happened with Russia, and they're not likely to go back to that shortly.
Great. Good to hear the bottleneck's been lifted. A couple of more questions starting to come through. Not sure what exact detail you can provide, but in regards to the offshore farm out or sell down, what's your expectations on likely timing there?
Yeah, we think that the offshore asset at Teodorico has got huge potential. There's a couple of, for example, the environmental approval was approved by the ministry. And there's been a couple of legal challenges. A couple of local environmental groups and so forth have done that normal sort of challenge, and so we have to wait to see that those challenges to the ministry are overcome and taken off the table. We're looking at the rules that they have around what they call their plan of areas and exactly how that impacts. This plan of areas was developed prior to the Russian invasion, and now the Italians have got a much more open desire. We are in an area where we have exemptions because of the size of the field and because the approvals were granted ahead of time. There's no further exploration in a number of different areas, but existing ones can go through. So we're getting clarification on all of these sorts of issues. And then we will look to the optimal outcome over the next year or two to either divest that asset because it's very, very attractive to some of the bigger players, or to joint venture that asset and to bring it into production. So the cost of bringing that into production is around about sort of 60 million euros or so, not the very 2.7 million that we had to come up with to bring the Selva Pot de Mer well into production, which is adjacent to the national grid. So it's got different dynamics, but certainly it's an incredibly valuable field that we feel that we will be able to, in this environment, really realise the optimal value for our investors based on being able to either divest or to joint venture that field.
Great, thanks, Kevin. A lot of questions coming through, so I'm going to try to aggregate some together. Post the initial production at Selva, in terms of plant capacity, infrastructure, timing, what sort of framework and costs, etc., are we looking for in terms of bringing on those lookalike wells?
Sure, those lookalike wells, I think it's a no-brainer to be connecting Selva North and South, to be doing the G&G, to actually drill those particular sites, and then to build a pipeline to connect to the installation plant at Pot de Mer. Very simple process, going through the regulatory requirements and so forth. Now that we've got the production concession, things are going to be much more streamlined. We've got that area that we put as a timeline there. We've talked about the G&G being done between December and June, and then having the drilling in June, September to December 2024. If we can bring that forward, we will, and there is an appetite to bring it forward, but that's the planned and budgeted construction timeline.
And in terms of Pot de Mer, the plant capacity, what does that look like post first well and then going forward?
We've got capacity at that installation plant on the surface for about 150 standard cubic meters, and what we're looking at is 60,000 standard cubic meters in the first month or two, taking it up to perhaps 80,000 standard cubic meters by month 3. And that's got capacity, nearly double that capacity just at the current skid-mounted surface plant that is built there. The pipeline is about 300,000 standard cubic meters that is going to be connected to the national grid. And so we could just using the modular installation, we could increase that potentially up to 300,000 standard cubic meters. At the moment, the Pot de Mer well will be producing, it's designed to produce, 80 to 100,000, up to 150, 160,000, without having to put any additional modular additions there. But certainly it's got the capacity to deal with all of the extra capacity from Selva North and South, and where that's what excites us, is that there's about a 2-kilometre pipeline is all that's required. Very low cost, very easy to walk that through the regulatory requirements. Once we've done the G&G, we'll be involved in getting all of that through. We want to do it as quickly as we possibly can. So it's got the capacity. That's the answer.
Right, Kevin, we'll have 3 quick questions just to end here. What's the resource life or reserve life in the case of Pot de Mer at those sort of production rates?
At those production rates, even without any compression, we're looking at potentially, sort of 5 or 6 years, and we can extend that. One of the things you've got to watch out for is the breakthrough of the water table. If anyone wants to go back and look at the competent persons report, they will show in that report how there's been about 25 wells drilled in this region, in this area of Selva, over the last 40 or 50 years. And we think with the prospective resources, if it's managed effectively, it could go out for, sort of 13 or 14 years to the late 2030s. And so we want to extend the life as much as we possibly can. And that's about, careful management, not pushing it too hard too soon. And so certainly with the 1p, the 2p reserves, 5 or 6 years, but that's not the end of it. The fact is that a number of the other wells, the 25 other wells that have been drilled in this region, they've been able to generate revenues and gas into the grid for many, many more years than the 5 or 6 years that we're talking about. But we're just talking about the proven reserves at this stage. And at the prices that we've got, even the futures prices, that's looking very attractive through 2024, 2025. Those futures prices are still up there, close to that €1 mark, and which is still multiples of the 20 euro cents that we'd originally done our estimates on.
Just a reminder, which fields are related to that environmental approval challenge?
Well, that's the Selva, that's the Teodorico, which is the offshore. There's no problems with the Selva onshore. It's all go, all systems go. All the local governments, the local councils, municipalities have all approved. We've got our Intesa from them. We're working very closely with the local community. The offshore field in Teodorico, we are very confident that the government is well within its rights to develop. They've already had a number of developments with E&I in this area, and there's huge potential there to help Italy get off its dependence of Russia by really focusing on some of those offshore fields. And I think that's going to be the appetite that the government's going to have.
Right, just conscious of time. Before I get to my final question, which has been sent through, which is a good opportunity for you to sum up. If there are any further questions, do feel free to send them through to Kevin or myself here at NWR Communications. So the final question is a great segue into a sum up. You mentioned Po Valley's been around a long time, 18 years listed. You're actively involved now. So, maybe just a way to sum up what's different about the market and the opportunity now and going forward.
Sure. Now, look, that's a great question. Po Valley was, a small operator, explorer, and started to bring some assets to into development, and had a lot of trouble with, basically the regulatory regime, trying to get things through. Really, since the global financial crisis in 2008, it's always been difficult to raise capital, raise cash, and so it struggled along for a long, long time. But the assets were excellent. So I came in as an investor. In fact, I own well over 20% of the capital. A number of other investors have gotten together and said, "Hey, we would really want to run this company for investors and focus on investors." And so I've taken on the role as chairman, and we've really rejigged the board. And we've really focused on really bringing together a really good local management team that has got a huge amount of experience. And the regulatory environment has changed dramatically right across Europe. And so the prices now are at remarkably high levels, and look to be sustainably high for a sustainably long period of time. So it's now an incredibly attractive thematic. Po Valley has got the jump on so many other competitors because of the experience, because of the time and the relationships with the regulators. And it's a totally new company now. And the way that we are going forward, we're incredibly focused. I can tell you I'm focused because of my very large holding in the company. All the rest of the board are very focused on getting this Pot de Mer into production. Once we've got the revenues coming from the Pot de Mer production, that's going to help us to fund. We no longer have the problems that so many small cap companies have of trying to raise money, trying to get the funding, and trying to get the job done. We're going to have money that's going to be well prudently applied to achieving the optimal results for shareholders. And we're in an environment where we've got all of the tailwinds. And as we started this off with, we're at the right place at the right time.
Great, Kevin. That was a great run through, and apologies again for the technical issues, but anyone that did miss the webinar, it will be made available on the Po Valley Energy website. So thank you, Kevin, for your time, and good luck with the next 12 months. It sounds incredibly exciting.
No, it is exciting. The fact is we've got revitalized management. We're aligned and well credentialed. We've got a hugely supportive macro environment, and we've got those development ready assets that will be less than 6 months away, and they'll be on stream and producing some fantastic revenue for us, as well as all that potential upside that we've got the cash to develop. And I'm very excited. So it's great to be able to share that with some of our fellow investors. Thanks, Aidan.
Excellent. Thank you, Kevin.